Hey everybody, Economic Ninja here. I hope you are doing great. Got a great story for you. The numbers are out. U.S. consumer prices blow away expectations. They rise for the 27th straight month. Great news, guys. Our president said that they were getting inflation under control and it wasn't going to last long. You remember all those things, said about 6-7 months ago. Now they're completely quiet. The Federal Reserve said they were going to get on top of inflation. Remember that back in December? But they said, we're going to get right on top of inflation starting in the spring. Why didn't you get on top of it back then? Why didn't you raise the Fed funds rate in December when you said inflation's an issue, we're going to get on top of it? Or what about in January? Hey, let's get on top of it. No. Let's wait. Let's wait for inflation to get worse. And then we're going to go little point raise. Little point raise. Yeah, that's what they do. Just so you know, they're not doing crap, okay? However, even though it might be monumental, massive rise to a lot of people to see the Fed funds rate at 4%, which is going to surely push mortgages over the 8% mark. You may think that's a lot, but it's not going to tame inflation and how they translate into consumer prices. All right, so here we go. Expectations for a 0.1% month over month drop in CPI has set the squeeze algos on fire in recent days as the small drop signals peak inflation, right? Everyone's like, this is it. The numbers are great. The problem is last July, we also had the exact drop, all right? This is a cyclical, a seasonality thing that happened, all right? In recent days, as the small drop signals peak inflation and Goldilocks and a unicorn-filled Fed will step back and declare victory with lag. Short-term interest rates, however, have not been buying that dovish story. Now here we go. Headline CPI came in hotter than expected, rising 0.1% month over month, as expectations of a negative 0.1% month over month. Again, the trend is the pros out there are all wrong. So don't listen to people like me or other people out there that have been investing since, late 90s. Don't listen to us, listen to professionals. They went to school to be wrong and they can actually do that. They don't have any backlash. It says this is the 27th straight month of rising inflation. And while the asset in energy fizzled, with the energy index increasing 23.8% for the 12 months ending in August, a smaller increase than the 32.9%. Hey, do you guys, just curious, are you guys stoked? It came down a little bit. How's your energy bills doing right now? Think about it. We're getting energy bills. Mrs. Ninja actually told me our electric bill the other day was $345. Put down in the comment section if you can beat that, okay? Which I'm sure you can, because I want to see what are people paying for electricity last month. I paid $345 last month, live in a small house, 1,600 square foot, 1,500 square foot, very small. That's how much I paid. I don't know, I'm in crazy California, but I want to hear around the country and around the world what you paid for electricity last month. So I don't care that it came down a little bit. It's not going to bring relief to the actual common man and woman that work hard, pay taxes, and actually keep this economy going, all right? And it says, and while the ascent in, it says July, the big shock was the food index, which increased 11.4% over the last year, the largest 12-month increase since the period ending May of 1979. And again, remember, I've been talking to you about this for the last year, that we are going in reverse. From the 80s inflation, we're seeing 1983 inflation numbers, 82, 81. Now we're at 1979, okay? And it's going to keep rising. This inflationary period right now that we are in will be, you will look back and it will be recorded in the history books as way worse than what happened in the late 70s. Again, an amazing opportunity for why you'd want to be invested in hedges against inflation like precious metals. It says, while the food at home index rose 13.5%, the largest 12-month increase since a period ending March of 1979. The flip side, the energy component of August CPI fell by 5% month over month, the biggest drop since the COVID crash in April. Again, do you care? Are you seeing that translate into your bills? No, you're not. Now, here we go. More notably, the Fed's preferred metric, core CPI. I love it when the Fed has all these different metrics. Let's take out real things like food, fuel, or energy. Let's look at the core CPI. The core CPI was dramatically hotter than expected, rising 0.6% month over month, double the 0.3% expected. So even the metric the Fed wants to use to lie to you, remember, CPI, it's coming in at twice as hot. Now, for so many people that think that the Fed is about to pivot, these numbers are proving that they are not going to pivot. And I want you to understand, as interest rates rise, as the cost of borrowing rises, companies are going to see their margins shrink into nothing because they have borrowing costs, they have supply chain issues, they have employment issues. So you are going to see more and more layoffs because, sad to say, the employees are the low-hanging fruit when you're referring to payroll on the balance sheet. And that is going to continue to weigh down this economy. But the problem is the Fed can't pivot because these numbers are coming in hotter and hotter and hotter. Now, quite frankly, I do not believe we're going to have a Paul Volcker moment. I do not believe the Federal Reserve's got it in them, especially Jerome Powell, because they know how fragile this economy is. They want to keep going until it snaps and then go, we didn't know. But that's exactly what's happening. With the EU right now completely crumbling because of an energy crisis, we are going to see that translate into our crisis one day. It's crazy. The DXY up high right now because, again, it's mostly compared to a failed currency experiment called the euro. So everybody's going, gold and silver are trading down right now because the dollar's up, the dollar's strong. Well, I'm going to be honest with you. I don't put a lot of credit in dollars. I believe that they're total garbage because they can be printed at just anyone's whim. Just, hey, we're going to print more money. Gold and silver, there's only so much of it. And quite frankly, there's less than 1% of the population of this earth that owns any of it. The choice is, and this isn't financial advice, I'm just a dude with a bro walking a dream. I'm a dork, don't listen to me. But do you want to invest in something or do you want to own something that less than 1% of this world owns? It's called being a real investor, contrarian investor. All right, guys, I hope you got something out of this. I'm going to link this story below. With that being said, the Economic Ninja is out.